Good afternoon, traders. This market update is for February the 28th, and it is 4:35 in the afternoon. Today, the U.S. markets finished in the negative after being up majority of the day, and then going into the close, the short sellers took control, knocking the Dow Jones down 21 points, NASDAQ down 2, and S&P down 1. So basically, it was a flat day. Gold retreated today after hitting a 1603 high in the overnight session, followed by a low of 1574. And oil. Today was the day that I thought oil would be going to 94 if we held above the prior week's low at 92.44. That didn't happen. Once the market sold off, oil followed through. Remember, usually they trade in tandem, just like copper. You need to take note of the correlation between these three derivatives, because you could get a lot of signals that lead into trading opportunities. And gold's been working inverse lately. If the market goes up, they sell gold. So if this little sell-off continues in the U.S. equities tomorrow, I wouldn't be surprised if gold caught a bid. Looking at Europe, we were actually green in majority of the European countries, including Italy. It finished pretty strong, up about 0.6% after the sell-offs came during the Italian elections on Monday, and we retreated from then. We've been strong ever since. Asia finished up. New Zealand, you don't see that on here, they were down, and India was down, but everything else looks good. Yen US dollar pairs trading at 92.65. Remember, that's what all the top analysts are calling, saying it's going to go back to 100. We're still keeping an eye on this pretty closely. Dollar index finished up about 0.4% at 81.94. Today we had fourth quarter GDP at a revised rate of 0.1%. Basically what we're looking for is growth. Doesn't matter where it is, US, China, Europe. We just need growth, because the Eurozone is expected to contract 0.3% in 2013, and that's not really healthy if we're looking for a recovery scenario. Last year in 2012, it contracted 0.6%. So it is a slight improvement, but it's not where we need to be in order to keep this rally going. In addition to that, we're looking at an average of 12.2% consensus for unemployment over the Eurozone, which is also unhealthy. We also had jobless claims today, dropped 22,000, and they continue to nudge down. The gray line shows you the claims, and this is the 4-week average. That's more prevalent when trying to gauge this as an indicator on the economy, and that's also moving down as well. Tomorrow, we must look out for personal income and outlays, see where the consumer is spending their money. This should bring even more volatility to the markets and increase the ranges in the U.S. indexes. Now looking at charts, starting with the NASDAQ, which I trade majority of the time. So ever since we had this gap up from the fiscal cliff at the beginning of the year, we've been sideways. Actually going back for the past month, besides this last 2 trading weeks of the year, I've been pretty frustrated. I've been making money, but it hasn't been how I wanted, just because the ranges weren't really there. It was tight. It was a nudge up, but it was just going a lot slower than I really liked. We saw the consistent higher lows, which showed us that the trend was still strong. And then we came in, and we had this big sell-off last week come through. Brought us down. They had another up day. They rallied it up and then closed on the lows on Monday. Remember that big sell-off? I think we were down 70 points from the highs. And then on Tuesday, rallied up a little bit, and it's just continued ever since until today. Your support level that you must watch tomorrow is 27.36.75, and if we could hold over this level, we will still continue to be positive on the week. Now looking at the Dow Jones, we aren't far from an all-time high at 14,267. Today, the high was 14,133, so about 134 points off the high. We really want to see if we could break it here, and if we can, you want to go and you want to look for some of the outperforming stocks that have been consistently beating earnings in this index. And if that does occur, we're going to see some follow through with the S&P, NASDAQ, and the Russell. Still about 75 points off the all-time high for the S&P index. But like I said, if the Dow continues strong as it has been, we should see some sort of move up here, at least to the 1540 handle. And the Russell 2000 has already hit its all-time high and continues to chug up. Today hitting another high of 915.5. Here's a chart of gold futures. 1923.70 was the all-time high that we hit in September of 2011. And ever since then, we've pretty much been retreating. Now we are at a big level here at 1571. We took some trades off of it last week on Friday after it held the support, and we started buying futures into the Sunday session when we opened up around 7:30 p.m. That's when we started buying. Nice little rally here. Now we're coming back, and this is ugly. So a lot of traders, the professionals, are watching this little bounce that happened today, and they're positioning themselves. Now, I'm not saying there's not going to be any decoupling, because if we take out this low of 15.5, we could see 15.25 pretty quick. But we are watching this tomorrow for a trading opportunity. It should be very volatile. 15.82 is the level you need to watch and try to gauge your trades off of that. We're going to look at crude and then look at the euro, and I'm going to finish the video. As far as crude goes, as I mentioned, we were looking for a move up to 94 if we could hold the prior week's low. That did not happen today. If you look at this chart, we are still bearish and it's looking ugly. Now, my level for crude is going to be precisely at 89.16. If we continue down, if we get below the 91.33, this level should hold pretty strongly. And it's not a matter of if, but when I will enter back in this trade. And I really hope you guys enter in with me. I'll let you know now that I'm back doing the videos again exactly when I enter, so you can make the profits with me. And as far as the euro US dollar, again, this looks ugly. Yeah, we had a 2-day bounce, and this one was pretty easy to catch this 100 pip move, because when we went over the prior day's close, we just rocketed up. Little risk there. You could have put your stop right under that. And then today we pulled back down. We did hit another high, but we closed a little bit lower than the prior day's open. So let's see if we could get a little more downside on this euro US dollar pair, and the target's going to be 129.32 if this short selling continues. I'm going to end the video. Good luck trading tomorrow. If you have any questions, please write me a comment or message me.